What if I told you China just made it illegal for 1.4 billion people to move money into US stocks, not as punishment, but because Beijing needed that capital locked inside a new system launching in 4 weeks, a system built to settle global trade in gold, not dollars. The launch date is July 2026. The financial press reported both moves. Nobody connected them. We're going to do that right now.
You're watching Voice on Pages, where economics meets reality. Subscribe if you think in systems. The capital lock. The story begins on May 22, 2026, with a regulatory announcement most financial press treated as routine. The China Securities Regulatory Commission laid out a 2-year rectification plan specifically targeting offshore brokers like Tiger and Futu. The market caught on immediately. Futu's stock dropped 27.5% by the close, and Tiger fell more than 25%. Then the hammer came down on June 12th. Offshore brokers were strictly ordered to cut off new capital inflows for mainland investors. Their accounts were abruptly switched to sell only. We're looking at a massive scale here. Around $32 billion in assets are caught in this net across Futu, Tiger, and Longbridge. That capital can be withdrawn back to the mainland, of course, but it can no longer flow outward into offshore equities. The exit doors for retail capital were completely bolted shut. The Treasury Paradox. Now watch what happens in the bond market during the exact same window. While domestic retail money was being forcibly locked inside the country, sovereign capital was moving in the exact opposite direction. If we pull the U.S. Treasury's tick data, we see a highly calculated liquidation. Between February and March of 2026, Beijing dumped $41 billion of U.S. debt in just 1 month. By April, those holdings settled at $651.1 billion, hitting an 18-year low. Zooming out slightly, they offloaded roughly $109.7 billion since January 2025. To put that trajectory into perspective, we only have to look at the historical high watermark. Back in 2013, China held a peak of $1.317 trillion in U.S. treasuries. The macro trend is crystal clear. This is a structural capital flight from dollar-denominated sovereign assets down to the current lows. They are actively clearing the balance sheet. The clearing mechanism. 2 moves, 3 weeks apart. The press reported both as separate stories. They are not separate stories. One move locks the capital in, the other moves it out. What they are building in between is what nobody is talking about. This is the method in action. Track the capital, not the headline. If you want the full framework for reading these shifts before the market does, I put the 5-step signal extraction protocol into a guide, link in the description. By ignoring the surface noise, we can actually perceive the underlying plumbing of an entirely new financial architecture being assembled. Hong Kong is building a precious metals clearing system, mirrored directly on London's infrastructure, relying heavily on unallocated accounts. To pull this off, the FSTB and the Shanghai Gold Exchange are expanding the airport depository to hold over 2,000 metric tons within 3 years. For scale, London LBMA currently clears about 550 tons a day. In the background, official data confirms China has relentlessly stacked physical reserves up to 2,313 tons over 17 consecutive months of buying. They are securing the physical asset to back the clearing mechanism. The real tell here is the board of this new clearinghouse. It's not just Chinese banks. You've got JP Morgan, Citi, HSBC, Standard Chartered, UBS, and ANZ all participating. Major Western financial institutions are quietly securing a seat at a competitor's alternative clearing table. Capital doesn't follow safety. It follows logic over loyalty. The India calculation. But this is where it stops being abstract. Because if you are sitting in India right now, this is your problem too. Consider the Reserve Bank of India's portfolio. As of March 2026, they held 880.52 tons of bullion. The structural leap is what demands our attention. Gold now makes up 16.7% of India's foreign exchange reserves. Compare that to 2007, when it was hovering around 2.8%. It's a massive, deliberate reweighting of national wealth toward hard assets. This shift is already dictating physical commodity trade. Right now, Indian refiners are settling Russian oil purchases using rupees, yuan, and dirhams, operating entirely outside the dollar system. They haven't implemented bullion settlement for oil yet. India hasn't made the choice yet. But for the first time, the infrastructure exists to make it. China just built the road. Whether India walks it is the next question. The strategic silence.
When JP Morgan and HSBC join your competitor's clearinghouse and your government says nothing, that silence is a data point. You would naturally expect intense geopolitical friction from Washington over this. Instead, searching through Treasury and State Department records yields zero official pushback on the record. That absolute silence confirms the infrastructure for non-dollar settlement is being methodically assembled in plain sight, and the established powers are either unwilling or technically unable to stop it.
We already know the architecture functions because the parallel systems are live. Look at mBridge, the alternative multi-CBDC cross-border payments platform. It has already processed roughly $55 billion in transactions. These aren't theoretical pilot programs anymore. They are moving institutional capital right now.
Then you have the BRICS unit. Piloted in late 2025, this digital trade settlement token is backed 40% by gold and 60% by a basket of local BRICS currencies. It plugs straight into BRICS Pay, a network projected to handle 15 to 20% of world trade settlement by 2030. They aren't just storing physical metal in a vault, they're creating a fully integrated digital settlement network.
The optionality architecture. This is not a story about China destroying the dollar. That framing is wrong, and it is a distraction. This is about China building a system where the dollar is optional, not dead, optional. You cannot sanction optional. You cannot freeze optional. Optional just sits there. And every year it works, it grows. Moving forward, there are exactly 3 forward-looking indicators you need to track. First, the official operational date for the Hong Kong clearinghouse. Second, China's TIC holdings officially breaching that $600 billion floor. And third, the first Gulf sovereign wealth fund publicly joining the Hong Kong clearer. We are watching a quiet architecture shift unfold, exactly like 1971 when the dollar left gold. There was no grand announcement, the framework simply changed, and the entire world adjusted.
Every video on this channel is built on the same framework. Find the actor, find the constraint, follow the capital. The signal extraction method is linked below. There is also a free signal analyzer GPT in the description if you want to run this yourself. Subscribe to Voice on Pages for the next signal before it becomes the headline. Because in the end, capital doesn't have loyalty, it has logic.